Warren Buffett and his Berkshire Hathaway have accumulated a record amount of cash, exceeding $189 billion as of early 2024. And this amount has likely continued to grow. The company has also been a net seller of stocks for several consecutive quarters, a trend that is drawing attention. The legendary investor, whose intuition has outpaced the market for decades, is sending signals that have Wall Street holding its breath. Today, we dive into a topic that, I admit, gives me goosebumps: financial markets. But not through the lens of abstract theories, rather through the real, almost tangible actions of a person whom the whole world is watching. I'm talking about Warren Buffett. Warren Buffett, in his more than 60 years in business, as the legend goes, has almost never made serious miscalculations. He doesn't shout about upcoming storms, nor does he predict crashes to the public. His method is different: cold calculation and actions that speak louder than any statements. And it is precisely these actions, Berkshire Hathaway, his investment empire, that are now causing real concern. Usually, Buffett is a pure buyer. He always strives to invest, find undervalued gems, and grow their value over the years. Makes sense, doesn't it? After all, that's how the greatest investor uses his talent. But what we've been observing for the past 2+ years breaks all the usual patterns. This is not just a light portfolio adjustment. It looks like a systematic preparation for something truly large-scale. These are the first, most obvious signs that cannot be ignored. Warning signals from someone who is used to seeing the future before others and understanding them. Figuring out what's happening behind the scenes is vital for us. Are you ready to peek behind the curtain? Let's take a look into Buffett's treasure trove and his unprecedented sell-off. Let's now dig deeper and dissect these anomalous maneuvers of Berkshire Hathaway. Let's start with the main thing: the mountain of cash that Buffett has amassed under his control. Almost $190 billion. And this figure continues to grow. Can you imagine that? Try to just comprehend that amount. It's more than the GDP of many countries in the world. This is the largest cash cushion in the company's history, and it continues to grow at an alarming rate. A particularly noticeable acceleration occurred when Berkshire started acting as a net seller of stocks. Specifically, at the beginning of 2024, Berkshire significantly reduced its stake in the tech giant Apple, selling about 13% of the shares it owned. The company also completely divested from other positions, such as in HP Incorporation. It's important to note that information about the sale of large stakes in banks, such as Bank of America, was not confirmed during this period. BOA remained a major position. This doesn't seem like a typical rebalancing, wouldn't you agree? The accumulation of such a colossal reserve, which has significantly increased in recent years, looks like a deliberate creation of an arsenal for future opportunities or upheavals. But why does he need so much cash? And the second, equally important point: for several consecutive quarters, throughout 2023 and 2024, Berkshire Hathaway has been selling more assets than it buys. The trend is obvious. Buffett, known for his philosophy of buy and hold forever, has suddenly turned into a seller. How is that possible? Remember how rarely he parts with entire companies. The last time he sold a newspaper business was in 2020. Before that, it was an insurance business in 2019. This is a once-in-a-decade event for him. And now he is actively selling shares of public companies, and according to reports from the Wall Street Journal, in the spring of 2024, he seriously considered selling his real estate agency. All of this together, record cash and continuous selling, paints a picture of an investor who is not just expecting a correction, but is preparing for something much more serious, possibly for a moment when he can buy the world's best assets for next to nothing, as he did in past crises. Is history repeating itself? The oracle who never makes a mistake. Truth or a beautiful myth? Let's talk about the legend of Warren Buffett. There is this almost mystical aura around him, isn't there? A man who, they claim, in over 60 years of investing has practically never made a mistake. Just think about that. 60 years at the top of the world's most unpredictable markets. Of course, absolute infallibility is more of a beautiful legend, an image created by decades of success. Even geniuses make mistakes. But what is undeniable is his incredible intuition, his ability to see what others don't notice, and to act ahead of time. His reputation is such that every move he makes, Every purchase or sale is scrutinized under a microscope by analysts around the world. That's why his current actions are causing such a stir. When a person with such a track record starts doing something uncharacteristic, something that goes against his own philosophy, it makes even the most hardened skeptics take notice. You see, Buffett is not someone who makes loud statements about crashes or hands out predictions left and right. No, his language is the language of actions. He buys when others are panic selling. He hoards cash when others are mindlessly chasing growth. His investment decisions themselves become predictions that often come true with frightening accuracy. And now, when he has been selling more than buying for 9 consecutive quarters, when he is sitting on a pile of cash the size of a small country's economy, can this be ignored? Can you just dismiss it and say it's just a coincidence? I don't think so. His reputation, his history make it necessary to take these signals as seriously as possible. These are not just maneuvers of an investor. This could be a warning from the oracle himself. An alarming signal from the real estate world. Buffett is getting rid of realtors? Now let's focus on one specific but incredibly telling move that Warren Buffett, according to reports from reputable media in the spring of 2024, was considering. It concerns the possible sale of his own real estate agency. For Buffett to sell an entire business, this is an event of exceptional rarity. Let's remember, he is extremely reluctant to part with his companies. The most recent examples are the newspaper business in 2020 and an insurance company the year before. These are isolated cases over many years. He builds his empire on long-term ownership, on faith in the companies he acquires. And so, the Wall Street Journal reported in the spring of 2024 that Berkshire Hathaway was seriously considering the possibility of selling one of the largest players in the U.S. real estate market. The agency, which was formerly known as Prudential Realty, until Buffett bought it and gave it his own, albeit not the shortest, but certainly a loud name, Berkshire Hathaway Home Services. This company unites thousands of realtors across the country. It's a giant network operating in California, Texas, Florida, everywhere. This acquisition was made very timely, right before the boom in the real estate market, which intensified especially after the pandemic. Buffett once again showed his intuition. And now, amid all those alarming signals we've been talking about, news emerges about the possible sale of this asset. Why? Why would an investor who almost never sells anything consider getting rid of such a large business right now? The very fact that such a deal was even discussed is already sensational. It adds fuel to the fire of concerns about the state of the real estate market. Could it be that Buffett sees an impending crash and wants to get out of the game while he can still get a good price? Or is it something else? But let's agree, when someone like Buffett starts thinking about selling his real estate giant, it makes you really tense and take a closer look at what's happening in this field. Is history repeating itself? Ghost of 2006. You know, when I look at all these actions, Buffett now on this massive accumulation of cash, at his cautious, almost imperceptible hints, I get a very strong sense of déjà vu, as if I've seen this movie before. And the ending was, to put it mildly, not very cheerful. Let's go back to 2006, a year before the start of the mortgage crisis, which escalated into the largest financial collapse since the Great Depression. What was Warren Buffett doing then? You won't believe it. He was doing very similar things. He was methodically accumulating money and giving very cautious yet quite readable signals about impending problems. I remember when he was asked about the state of the real estate market, and his answer was remarkably similar to what you could say today. He said something like this: "We are seeing a slowdown in sales across the country, especially in overheated areas where real estate was bought not for living, but for speculation. You see? Slowdown in sales. Speculation." This was said in 2006. And what happened exactly a year later? The real estate market collapsed. It dragged down banks, insurance companies, the entire financial system. Millions of people lost their homes, their savings, their jobs. It was a disaster. And now let's return to our days. The year 2025. Buffett is once again accumulating record cash. He is once again making evasive but alarming statements He is considering selling his real estate business. Isn't that a frightening coincidence? Could it be that history really does repeat itself, and we are once again on the brink of something similar? This historical parallelism makes the blood run cold in one's veins. Red flags in the real estate market. Numbers don't lie. All right, historical parallels are one thing, but what is happening in the real estate market right now? What specific facts support the concerns, possibly shared by Warren Buffett? Let's take a look at the numbers because they rarely lie. Take, for example, Miami, one of the hottest markets in recent years. You know, what is the current months of inventory indicator there? This is the time it would take to sell all the properties listed for sale at the current pace. It has significantly increased compared to the pandemic frenzy, when it was about 1 month and is now measured in many months, indicating a clear cooling of demand. Can you imagine the difference? This means that sales have significantly slowed down. Properties are piling up, and there aren't enough buyers. And it's not just Miami. Across the country, there's a sharp drop in transaction volumes. People simply can't or don't want to buy homes at the current mortgage rates. Although rates have slightly decreased from the peak levels of 2023, they are still at beginning of 2020. The fifth remained at a high level, often in the range of 6 to 7% and higher. If we follow Buffett's logic, which he voiced 2 years ago, 2006, then the slowdown in sales is just the first stage. What comes next? That's right, a price collapse. When supply significantly exceeds demand, when properties linger on the market for months or even years, sellers have to lower prices just to get rid of the assets somehow. And these current indicators, stagnant sales, huge inventories of real estate, high rates are not just yellow cards, they are real red flags. They are shouting that the market is in an extremely unstable state. And if Buffett is right, then the next act of this drama won't take long to unfold. And it could be very painful. The oracle's silence. What lies behind the ambiguity? And what does Buffett himself say about all this? Is he trying to calm the markets or, on the contrary, warn investors? This is where it gets most interesting and perhaps most alarming. His recent comments, or rather, his avoidance of direct forecasts, say more than any forecasts. Imagine Buffett's situation, a man whose opinion on the economy is worth its weight in gold. They ask how he assesses the current state of affairs. What does he answer? At the annual shareholders meeting in May 2024, he essentially avoided making direct economic forecasts, noting the complexity of predictions and the uncertainty of the future. He did not give clear guidance or claim that everything is fine, but he also did not make loud statements about a collapse. His caution and reluctance to give forecasts were perceived by some analysts as a sign of particular concern. Why? Can't he or doesn't he want to give a clear assessment? It just blows the mind. And add to this his well-known concern about protectionism and trade tensions. Although the sharp phrase sometimes attributed to him about tariffs as an act of war is not confirmed in his public speeches, Buffett and his late partner Charlie Munger have repeatedly emphasized the importance of free trade and warned about the negative economic consequences of trade barriers and tariffs. What does this mean in the current context? What consequences is he thinking about? Not just the collapse. Revolution devours the old market. But let's momentarily divert from the grim forebodings of collapse and look at the situation from another angle. Perhaps Buffett's decision to consider selling his real estate giant is not only related to the anticipation of falling real estate prices. What if the main reason lies within the industry itself, in tectonic shifts that are transforming it right before our eyes? Here's the point. Traditional real estate agencies primarily earn from the number of transactions, receiving a commission from each sale. But now new players have entered the market, tech companies that are literally turning everything upside down. Remember Redfin, which we already mentioned. They pay their agents a fixed salary plus bonuses, not a commission. This allows them to offer clients lower rates, undermining traditional agencies. Or take Rocket Mortgage. They have automated the mortgage process, creating a sort of assembly line where each step is handled by a different specialist. This disrupts the usual connections between realtors and banks, which used to match lenders for their clients. And the company eXp Realty even offers agents the opportunity to keep 100% of their commission after meeting a certain annual plan. Can you imagine? 100%. Of course, agents are moving to them. All these new models make the classic real estate business, like Buffett's, less profitable and, increasingly, less competitive. And we know Warren Buffett can't stand companies that lose their edge, their profitability, that become obsolete. Perhaps he just sees that this train is leaving, that the traditional model has outlived itself under the pressure of technology, and he decides to exit this business now, while you can still get a decent amount for it, money for it, instead of waiting until it completely loses its appeal. This doesn't eliminate the risks in the real estate market, but it adds another important factor into the equation. A perfect storm is approaching. The economy is on the edge. Let's now broaden our perspective a bit and look at the big picture, at the macroeconomic background against which all these events are unfolding. After all, Buffett's actions, no matter how insightful they may be, do not occur in a vacuum, right? They are a reaction to much larger global processes that affect all of us. We are living in an era of persistently high inflation that stubbornly refuses to return to target levels, despite all the efforts of the Federal Reserve System of the United States. The Fed has been raising rates aggressively, trying to cool down the economy. But it's a double-edged sword. Expensive money stifles business, slows down investments, and hits the wallets of ordinary people through the same mortgage payments. And what about the recession that everyone talks so much about? Look at the consumer expectations charts. People's confidence in their financial future and the state of business has remained low by historical standards. Such indicators are usually observed during periods of serious economic difficulties. In recent years, there has been a significant level of government spending and budget deficits, which have supported the economy, possibly masking some real problems. And now, as this fiscal stimulus may be decreasing or its effectiveness is diminishing, we are beginning to see the true state of affairs. Add to this potential trade wars, those very trade tensions and tariffs that Buffett warned about. This creates additional inflationary pressure and risks for global trade. And could it be that Buffett, with his experience and intuition, doesn't see all of this? His actions of accumulating cash look like preparation for very tough times. A master's strategy during the storm. What does it teach us, Buffett? So what does Warren Buffett do in such uncertain, troubling times? Does he panic? Does he sell everything in a rush? Of course not. That would be completely unlike him. He has his own strategy, honed over decades, for navigating through a storm, and it can teach us a lot. Buffett's main principle during a crisis is patience and readiness. He doesn't try to guess the exact bottom of a fall or catch a fleeting bounce. Instead, he does what we are observing now. He accumulates large reserves of cash. He creates that very arsenal we talked about. Why? To be ready to act when his time comes, and his time comes when there is panic in the market, when fear reaches its peak, when investors are frantically selling off their assets for next to nothing just to save something. That's the moment Buffett goes on the hunt. Remember his famous phrase, "Be fearful when others are greedy, and be greedy when others are fearful." He waits for the moment of maximum panic to buy up the best, highest quality companies and assets at the lowest prices. He did this in 2008 when he invested in Goldman Sachs and General Electric on very favorable terms for himself. He did this, and during other crisis periods. His massive cash reserve is not a sign of fear, it's a sign of preparation for future opportunities. He understands that a crisis is not only about risks, but also a time of tremendous opportunities for those who remain calm and have available funds. While others are running around in panic, he calmly selects the best lots at the sale. And perhaps it is precisely for such a sale that he is preparing now. His actions are a lesson in calmness, foresight, and strategic patience in a world gripped by anxiety. Two titans, two worlds. Buffett versus Musk style. When we talk about Warren Buffett, we envision a model of calmness, long-term strategy, measured steps, and almost paternal care for investors' capital. Isn't it? His approach is a classic, time-tested one. But how strikingly different this style is from the approach of another titan of modern business, Elon Musk. I can't help but recall recent stories surrounding Musk, his social network X, his sometimes eccentric behavior, which people talk about. Everyone. In one of the videos I studied while preparing, his metamorphoses were analyzed in detail. His fascination with social media, issues with his neural network Grok, which, ironically, called him the main liar. This is the picture of a leader living on the edge, constantly taking risks, generating news almost every day, often not the most positive. His companies Tesla, SpaceX, Neuralink are undoubtedly revolutionary, but the risks there are off the charts. Warren Buffett, as far as I know from his public statements and philosophy, has always emphasized the importance of understandable business, stable management, and avoiding excessive, especially unpredictable risks. He values companies with a solid foundation, with a long history, rather than those that soar on hype or promises of future breakthroughs. He and his late partner Charlie Munger have often hinted at their disapproval of speculative manias and leaders who take on too much or act impulsively. I haven't found direct harsh quotes from Buffett criticizing Musk specifically, but the contrast in their approaches speaks for itself. Buffett hoards cash and waits for the storm. Musk launches rockets, ships monkeys. Two completely different worlds, two different philosophies of risk management and business building. And looking at Buffett's caution today, one can't help but wonder whose approach will prove to be more correct in the long term, especially if the economic storm really hits. What Buffett signals mean for each of us? So what are all these signals, all these actions and hints from Warren Buffett leading us to? What do they mean personally for you, for me, for our investments? Our real estate, our future? Of course, Buffett doesn't give direct advice or hand out instructions, but his actions are food for thought and very serious ones. The main thing, it seems to me, is not to panic. A crisis, if it happens, is not the end of the world. As Buffett's example shows, it's also a time of opportunities. It's important to keep a cool head, monitor developments, analyze information, and be ready to act when the opportunity arises. Keep an eye on Buffett's actions. He rarely makes mistakes. Be vigilant, keep your finger on the pulse, and remember that even in the darkest times, new opportunities arise. I hope our conversation today has helped you understand what's happening a little better and think about your own strategy. The future is uncertain, but knowledge and preparation are our best allies.